Hey everyone, welcome back to Corporate Decoder, the place where we dissect corporate filings so you don't have to. Today we're diving into a report that's got a little something for everyone. It's like a financial potluck with a dash of drama sprinkled in. Think of it as a snapshot of how the MarketDesk focused US Dividend ETF, a fund that invests in dividend-paying stocks, performed during the first half of 2025. We will look at which sectors it bets on the most, how much it made, and if its expenses are in line with other similar funds. This report covers August 1, 2024 to January 31, 2025. This is a look under the hood to see how the fund is doing, what it costs to run, and where it's putting your money. You can find the official report at their website as well as contact them directly by phone. Let's talk about costs. For every $10,000 you invested, it costs you $17 to keep the fund running during the period. That's 0.5%. This tells you how efficient the fund is with your money, meaning how much does it cost to manage your money. Now, the fund's net assets is about $10.9. It holds 69 different stocks, and it has a portfolio turnover rate of 100%. This means the fund completely replaced its entire portfolio of stocks during the period. It had to pay almost $200,000 in advisory fees. That's like redecorating your entire house every 6 months. Some think it is good, some think it is wasteful. Let's see where this fund puts its money. As of January 31, 2025, the fund had over a quarter of its investments in consumer staples, companies making products people buy all the time, like food and household goods. Industrials, like construction and manufacturing, made up almost 19%. Materials, think chemicals and metals, accounted for about 10.6%. Then you've got financials and consumer discretionary, is stuff people buy when they have extra money, like entertainment and new clothes. Now let's peek at the fund's top 10 holdings. Lockheed Martin Corporation, T. Rowe Price Group, and Amgen are all on the list, making up around 2.1% each of the fund's net assets. So those are where they have the biggest bets. Now let's scroll into the actual financial statements. This part shows how the fund made or lost money. This is where we see all of the fund's investments listed out. It's a long list, but it shows exactly where the fund's money is. The fund had over $4 million in just aerospace and defense stocks. It also had a good amount of investments in air freight and logistics, as well as agriculture and farm machinery. Let's check out the fund's balance sheet. This shows what the fund owns, its assets, and what it owes, its liabilities. As of January 31, 2025, the fund had about $109 dollar fund, 25 to fund had about $109.88 now assets. Now let's look at the income statement. This shows how much money the fund made or lost over the period. The fund made $1.8 million in investment income. However, the fund experienced a net decrease of $3.8 million. That's not good. This statement breaks down how the fund's net assets changed over time. Over the period, the fund's net assets increased by $5.9 million. It started with $103.9 million, added with $109.8 million. This section gives you some key financial ratios. For the period ended January 31, 2025, the fund had a total return of negative 3.03%. The expense ratio was 0.35%. These notes provide additional information about the fund's accounting policies and practices. It's where you'll find the details behind the numbers. The fund invests in dividend-paying stocks. The fund values its investments based on market prices when they are available. If market prices aren't available, it uses fair value. The fund has relationships with several related parties, including the investment advisor, sub-advisor, administrator, and custodian. These parties provide services to the fund and receive fees in return. The fund may lend its securities to generate additional income. It receives collateral in exchange for the loan securities. They did, however, receive a mere $28 from securities lending. During the period, the fund purchased $137.6 million worth of securities and sold $109.2 million. They also did a lot of in-kind transactions as well. This section provides information about the fund's tax situation, including its cost basis and unrealized gains and losses. Due for the fiscal period ended July 31, 2024. The percentage of dividends that qualify as qualified dividend income was 100.00. So what's the story here? The MarketDesk focused US Dividend ETF is a fund that invests in dividend-paying stocks. The fund's performance was mixed during the period with a net loss of $3.8 million. I wouldn't use this as your only investment, as diversification is important. The high turnover rate and the high advisory fees are also worth noting, as this may be something that you want to stay away from or be aware of. The ETF has significant investments in certain sectors like consumer staples, but it's always good to keep an eye on how these allocations shift. No one knows what the market will look like in the future. In conclusion, MarketDesk focused US Dividend ETF is one of many ETFs out there. Its relatively small size means it's a niche product that you might be interested in. That's it for today's Corporate Decoder. If you found this breakdown helpful, hit that like button, leave a comment and subscribe for more financial deep dives.